Have you ever been so confused by a stock chart? A secret code might appear to be made up of all those lines and vibrant bars. What if, however, you could decipher the basic narrative that the chart is conveying? We'll break it down into straightforward, understandable steps in this video. A brief reminder that this is solely for your own learning and education. Let's begin. A crucial disclaimer before we start. I am not a financial advisor. The sole purpose of this video is to instruct you on how charts operate. Before making any investment decisions, you should always conduct your own research. This is not financial advice. Let's learn now. Let's begin with the most fundamentals. Two basic lines form the foundation of every stock chart. Data shares Monetive. Look at the bottom first. The timeline is represented by this line, which may be days, weeks, or years. Take a look at the side now. The price of the stock is displayed in this line. The price moves over time, forming a path where these two lines converge. This trajectory displays the overall direction of the stock, which we refer to as the trend. In actuality, it's merely a straightforward journey map for stocks. This pricing information can now be viewed in a few different ways. Number 1 is line chart. The easiest chart to comprehend is the line chart. It only displays the stock's closing price at the end of each day, week, or month. These closing prices are connected by a single, continuous line on the chart. The line chart is ideal for determining whether a stock is generally rising, falling, or moving sideways because it is so clear and simple. It provides you with a quick overview. Number 2 is bar or C chart. A bar chart, also known as an OALC chart, provides us with a lot more information than a line chart. The trading activity for a single day is represented by each vertical bar. The highest price the stock hit that day is shown at the top of the bar, and the lowest price is shown at the bottom. The opening price is indicated by the small notch on the left, and the closing price is indicated by the notch on the right. Thus, you can see the entire range of prices for that time period with a single glance. Number 3 is candlestick chart. Although it is much more visually appealing, the candlestick chart provides the same information as a bar chart. Every candlestick has thin wicks and a broad body. The conflict between the opening and closing prices is depicted in the body. The price closed higher than it opened if the body was green or white. It closed lower if the body was red or black. The stock's highest and lowest prices during that period are simply displayed by the wicks, also known as shadows. Because it makes it so simple to see the price action, it is the most widely. Let's discover the tale the candles tell now that you can read them. 1 is trend, the direction. The general direction of the stock's movement is known as the trend. It's the simplest to identify. An uptrend is when there is a pattern of higher highs and higher lows on the chart. The general direction is upward. It is in a downtrend if it is making lower highs and lower lows. The general trend is downward. It is referred to as a sideways or ranging trend if the price is primarily moving sideways, alternating between the same general high and low points. Knowing the trend enables you to gauge the mood of the market at the moment. 2 is support and resistance, the floors and ceilings. Consider resistance and support as a floor and a ceiling for the price of the stock. Support functions similarly to a price floor. Historically, buyers have stepped in and started buying at this level, making it difficult for the stock to drop below. On the other hand, resistance functions similarly to a price ceiling. Due to the tendency of sellers to appear and begin selling, the stock has had difficulty rising above this level. When the price breaks through one of these ceilings or floors, it frequently moves considerably to reach the next level. 3 is volume, the fuel gauge. Volume is comparable to a price movement's fuel gauge. It is represented by the bars at the bottom of the chart and represents the total number of shares traded over a given time period. It is comparable to a car driving with a full tank of gas when the price of a stock moves up or down on high volume with tall volume bars. It is thought to be a more powerful and important move. However, the move is weaker, like a car running on fumes, if the price moves with short bars and low volume. You can determine whether a trend or breakout is strong and has genuine conviction by looking at volume. To see how this all comes together, let's examine an actual chart. As you can see, the price is clearly rising, reaching the higher highs we discussed. Observe how it continues to bounce like a floor off this support level. And notice how the volume bar is very tall in relation to this significant price increase. That demonstrates how powerful the move was. The chart's narrative can be deciphered by integrating the trend, support level, and volume. You can now read a stock chart using its basic language. The most crucial thing to keep in mind, though, is that a chart only displays the past. It cannot forecast the future, it only tells you what has already occurred. It is not a magic crystal ball, but it is a helpful tool for your research. Reading charts should always be combined with your own company research. Gaining this knowledge is an excellent starting point for improving your investing knowledge. Please hit the like button and subscribe to Monetive if this guide was helpful to you in understanding stock charts. The channel benefits greatly from it. Which financial topic would you like me to cover next? Let me know in the comments. Thank you for viewing.